I'm joined by Vijay Valecha from Century Financial. Welcome to the show. US dollar is seeing some declines this week, last week, and maybe it was holding up after statements tightening or aggressive statements regarding tightening by one of the Fed chairs. But strong sell-off in the dollar. Can we say that we have peaked out and we will not cross this peak now?
Well, we might see that currencies have, all currencies against the dollar might have bottomed out and the dollar might have peaked out. But it is definitely not a thing that it is a one-way direction where we'll see the dollar continuing to weaken going forward. We might see the dollar going back up to hit that double top again. It does look like the dollar yen might have peaked out, but overall other currencies against the dollar can easily weaken even further, especially those in the developing regions.
In your view, the moves by the Fed in the coming days, which is not a signal for US dollar, but all markets are looking at the Fed. The Fed and Jerome Powell in the last meeting, they said not necessarily that we should see clear inflation to lower the pace of tightening. And now markets are awaiting this tightening, and they lowered their forecast. Is one single data regarding to inflation, is it enough to lower the rate of tightening by the Fed, or do you think they can take another option on they prepare the market for a different option later?
Well, realistically, markets in all bear market situations are always over optimistic, and the relief rallies in a bear market are always extremely steep. The reaction that we have seen last week from the markets is pretty much an example of just that. One CPI data does not mean that that inflation is not a problem anymore. Also, one inflation data does not mean that the Fed will change its course of action. The Fed definitely will look at how they can make the softest landing possible for the markets. But at the same time, it's very important that inflation has to be tackled and removed back to 2 or 2.5%. For that, I think the Fed might be increasing interest rates by maybe not 0.75, maybe 50 basis points the next time around. But they might have 4 more rate hikes of 50 basis points. So effectively, this blow will get softened, but it will not be the end of the rate hike cycle.
It's clear that you like to look at the market historical behavior. Yes, bear rallies are strong and sharp, just like what we saw recently. But many people in Wall Street believe that it's the end of the downward trend and now it's time to go back into investing. Do you think it's wishful thinking in the US? There is real possibility for the market to turn upward from the current levels.
Well, there is definitely a possibility of bottom formation where the markets might get sluggish and sideways, but markets to continue the rate at which they had from 2020 to 2021, and that rate of increase and new highs every month is looking more and more unlikely now to the situation. We have geopolitical pressures around the world. We do have supply issues which have not been corrected as of now. We do have oil pressures coming in from Russia and the OPEC. We do have Europe now openly standing up against Russia, trying to take a vote on calling it a terrorist nation. There are issues around the world which are not immediately solved by one CPI data. So yes, there's definitely a positive sign. There is a glimmer in ray of hope. But it doesn't look like we have bottomed out yet, and it does look like it is going to be a sluggish next year as well.
Thank you so much for your analysis, Vijay Valecha. You have joined us from Century Financial. Have a nice day. Thank you so much for having joined us today.
Thank you so much.
Thank you.